What? There it is, ladies and gentlemen. Welcome back to another episode of the Insurance Pro Show. We got a fun one for y'all today, especially if you are an insurance agent, you want to get to cross-selling, you're going to want to listen in for sure.
The Insurance Pro Show is a podcast for agents who want to grow their agency and be titans of the insurance industry. Learn from a panel of experts who share their agency struggles, their experiences with the nation's best carriers, and share the marketing secrets that successful insurance agents are using today. Now, here's your host, the Insurance Pro, James Cias.
There it is. There it is. All right, all you insurance pros. Before we dive into another fun episode, just a quick reminder to please subscribe on whichever platform it is that you're listening to us on today. Give us a like, give us a follow, subscribe, and drop a review. Help other like-minded insurance agents find value from our awesome guests while we rise up in the podcast rankings. I will sincerely appreciate every single one of you for it. And if you want to be a guest on the show, I would love to have you on to learn from you as well. Go to www.insurancebroshow.com/guest to schedule your time slot. Don't forget to follow me on all my social media at Insurance Bro Show. Ladies and gentlemen, we're so excited and so honored to bring another incredible guest to the Insurance Bro Show. Our guest today has an incredible tool that can help insurance agents everywhere increase their revenue by providing a visual, analytical cross-selling tool. He's on a mission to help everyday people better manage their risks and insurance, and through the power of his InsureTech tool, empowers the general population to see their risk profiles in a truly remarkable way. For agents, this opens the door to more open and meaningful discussions with your clients. Once a client sees how vulnerable they might be and where the holes in their insurance coverage are, it's an easy conversation to have with an expert to help shore them up. Here to talk about this groundbreaking technology, joining us today from Vero, welcome to the show, Ali Safavi.
That's great.
Hey,
Jay.
welcome to the show. How's it going, man?
Good. This was my favorite way to be introduced ever, and I've been introduced so many different times. So, thanks for having me, and thanks for introducing me in like the Western style that you just did.
Of course. It's my pleasure to have you on. Now, you and I, we've had a discussion before. You actually gave me the full demo, so I got a really good look at your product, giving you some feedback on it. You've been working on it still. But for the rest of the audience that has no idea what we're talking about right now, tell me a little bit about Vero. Tell our audience a little bit about Vero, the ideology behind it, where it came from, and where it is today, and how you're helping all those agents.
So Vero, as you described it, is kind of like an AI risk and insurance advice tool that is supposed to automate a lot of the recommendations that goes into better educating people, recommending them to the right amount of insurance, and to kind of do it, across all lines of insurance, not just life or not just auto, but looking at it from a holistic perspective, because we think there's a lot of overlaps. But the genesis of Vero really started with my previous position and my past life, which we were working with a lot of insurance companies, and we're working with a lot of the InsureTechs out there. And I kind of realized there are a lot of companies looking at making everything simpler, quicker, and to some extent replacing the insurance agents.
Mm-hmm.
And when you look at the consumer behavior, a lot of people are just buying the cheapest insurance product online. But the truth is, when we actually ask people, what do you want? Only 10% of people said they want a minimum amount of insurance. 70% said they want the optimum amount, they just want a good price, and they want the guided price to be able to get there. And with that, we decided to kind of spend time on building and improving the way advice is given, to be able to do it online, to do it automatically, as seamlessly as possible, in a modern way. And we also realized that we can't really do it without agents, that we need to work with humans. It's just a matter of like, what is the right combination, or what's the right mix? And that's really what Vero is about, is kind of figuring out what is the best way to do it. And so far, we have built a very solid and robust recommendation engine that could look at a customer's risk, help them understand what their needs are, and then recommend it. But then at the same time, I get the experts consulting on top of that to kind of walk them through all the numbers, walk them through all ideas, and to look at it from, as I said, a holistic perspective.
I hope you're insured.
That's the perfect clip every time, especially on this show. I love where you're going with it, because I think that is definitely a big fear for a lot of independent agents, independent or captive. It doesn't really matter. We all have that same fear in the back of our heads that one day the insurance agent is just going to be no more. There's going to be so much AI. There's going to be so much that people can do online. Most of us can go online and buy our car insurance from a website. But as you're saying, people don't generally know exactly what they're buying. They just move that, slider tool all the way to the left and get the price as low as they can, but they have no idea what they're actually buying. So this tool gives the consumer that visibility of what's going on, what's actually in their policy, or what their coverages might be, and how they're at risk. Right? Is that basically what we're doing here?
Yeah, exactly. I mean, the core thesis of Vero is that insurance companies know how at risk I am because that's what they use to price me. It's called actuarial science. It's kind of like statistics. They say, like, statistically, someone with your age, with this driving record, with this, like, basically the questions they ask in onboarding, this is the likelihood of them getting into an accident, and based on that, they price you. So they know how at risk I am. But when it comes to how much insurance I need, they don't give me that information. They have it, they know it, but they just don't give me that data. So we try to democratize the knowledge of understanding risk. Like, what is the likelihood of you having a disability incident, and how bad, how severe could that be? And then from there, and you could decide. We give you that numbers, and you could say, you know what, it's a 1% chance of an accident, and you know what, I'm comfortable with it. I want to take that risk, but at least you're making an informed decision versus right now that is complete black box. I mean, most people have no idea what that risk means, and they have no idea how big that is, and they just buy it to get it over with.
Yeah, a lot of people are just buying insurance just for the sake of having that, minimum coverage, that required coverage. But you said something just there where they have a 1% chance, or they have, a whatever percent chance. And Vero, from what I've seen, actually tells them not only their chances of having an accident, but what their potential loss could be. Can you tell me a little bit about the process of figuring out those numbers and what that would mean to somebody, just the everyday person looking at it?
Yeah, that's a great question. And that's actually one that, so there's two aspects to this. One aspect of it is the scientific aspect of it, which is like, are these numbers good? So the insurance industry is built on data. Insurance industry used to be one of the most data-driven industries ever, because the whole thing started with statistics. Is we look at millions of people and we say, what are the odds of this specific profile getting into an accident, and that is going to be how much they're going to contribute to this larger risk pool, which becomes the price of insurance. So insurance industry knows how to do this kind of stuff. So all we did is that we hired the same people who do it for insurance companies, and we asked them to do it for us. Get the same kind of data, build the same kind of risk models, and be able to project or predict for a person like this profile, what is the likelihood of them getting into accident, and how severe could that be? So it's not a new thing. All we're doing is democratizing it. The second aspect of this is, how do we communicate it to people? How do we translate it into how much insurance they need, and how do we translate it into a way that people understand it? One of the things that we know and we learn very fast is people get overwhelmed with data very quick.
Oh yeah,
they really don't enjoy getting into details of data. So
very true.
So we really have spent time trying to design it and communicate it in a way that is easier for them to understand, to be able to kind of give it to them where they need it, but at the same time do it in a way that an insurance agent has access to a more advanced, array of data that they have access to. So it's kind of both. So like an advanced mode, what we call an advanced mode, which is more for agents, so that they have more data that they could use for giving recommendations, and for the consumer to just say, like, look, you have $1 million at risk for disability, because that is basically your income for the next, 20 years if something happens to you. And the likelihood of that happening is like 4% for your age.
Makes sense. So as an agent, how do I take advantage of what Vero has to offer? In other words, if I am a partner of Vero, right, and I'm using your platform. I'm presenting it to my customers, and they are going to the website, filling out their information, and getting that risk profile. What are the benefits to me as an agent to say, hey, listen, you really want to, go through this quiz. You really want to take this product and or this questionnaire so that you know exactly where you stand on insurance. As an agent, I want them to have that knowledge because there's all of these different things that I can sell them, right? But where was I going with that? How can I
value the agent?
Yes.
Yeah. So there's 3 ways. Number 1 is that as an agent, you need to differentiate both with online price comparison websites, but at the same time with peer agents. So being a better risk consultant, having, kind of putting yourself out as a risk consultant versus just a note taker or an order taker is a big way to do it. Because if you're just taking an order, the user could just go online and fill out a form. How do you differentiate versus all these other players? And this is the way to do it. Now you're a risk consultant because you're saying this is your risk and this is everything you need, and you have a very informative dialogue with the customer. And at the same time, you're saying that this is coming from a third party, is not me saying it, because as you know, like a lot of customers might have questions about the agent and their intentions because of the commission model, and this allows the agent to say, like, look, this is what the system says, and this is what your data is. This is not me trying to just sell you. The second aspect of this is that we ask a lot of agents, and we realize most agents are not doing that many annual checkups, or even like every 6 months checking on the customer. Right. They're doing checkups, and we could automate it. And automating that allows us to not only make sure the customer is insured and we have a touch point with them to keep the relationship going, but at the same time to make sure we're not losing that customer to someone else because they just gave them a better offer. And most importantly, that's our touch point to be able to upsell and cross-sell that customer, because now we're looking at the protection gaps because the customer just had a baby, maybe because the customer just moved to a different house or did something else, and this is our touch point to be able to just look at their profile again and see if there's any gaps and be able to upsell and cross-sell that. And if the agent doesn't have any of the product lines that we offer, because as I said, we do it holistically, we give them also market access through some of the other partnerships that we have to make sure the agent not only sells the products that they have, but at the same time is the only channel for the customer to buy all their insurance needs.
That's amazing.
Yeah. And then
I surrender to your will.
That's what we want agents to say, right? Surrender to your will. You got it, Vero. I mean, it really is a super cool product. It does seem like a one-stop, one place where a customer can go fill out this questionnaire, and they know all the different lines and all the different ways that they could be, susceptible or vulnerable. Can you tell me a little bit about all of the different risk points that you guys look at and how you help to shore that up?
Yeah. So when we started Vero, we started thinking about, okay, what is it that I'm trying to protect? Think of it from a risk management perspective. What is it that I have at risk? So the assets that I have is my income, is my health, and are my basically physical assets, and then the liabilities that comes with it, like the property and casualty stuff. So from that perspective, for income, we look at so these are like the asset classes, and then for income, we look at the risk of life, disability, and unemployment, which unemployment, as you know, is not a big insurable product, but at least it gives the customer perspective of how much is our income at risk. The second category is health, which is health, dental, and vision. We also are looking at some critical illness stuff and supplemental health stuff, but we haven't rolled them all out yet. And then we have the property casualty stuff. So auto, home, pet, and any umbrella, any other products that goes with that. And altogether, we have right now 24 risk models.
Wow.
Which, we're rolling out risk models there all the time. So they're going to just increase from here to go into more niche products.
So this really is, like you said, a holistic approach where, I mean, you're starting with their life and disability, their ability to earn an income, and, taking it all the way to their health and all of their stuff. And this tool just takes all of those different things. And I remember when I took when I went through your demo myself, it even asks things like, how much do you have in your savings? Because all of these things are different risk factors, and tells you, or could tell the customer how much insurance of each different type that they might need based on even how much savings they have.
Exactly, because having self-insuring yourself with your savings is the best way to reduce your cost of insurance after comparing the prices. And we think the only right way to do risk consulting is to do it holistic, because in my opinion, to be able to give a good recommendation on auto insurance, you need to understand how much assets the user has, how much income they have for the liability and the BI, PD and all that other stuff. You need to understand how good is their health insurance for medical payment and setting deductibles there. You need to understand how much disability insurance they have, because the need for example, underinsured motorists would be a lot less if you have a good disability and health product, because that covers a lot of needs you have. And the same happens to every other line. So we think the only right way to do insurance is holistic consulting, and that's why from day one we insisted on being holistic and looking at everything from the grander view versus like just giving recommendations on a single line.
Absolutely. One of the other things that you mentioned was that you have a way to automate that 6-month or annual checkup. You're right that a lot of agents don't do that, don't have that built into their own SOPs, right, into their own standard operating procedures. And so it might not be something that they would think of. And your tool actually can provide that and gives them that third-party questionnaire and give them even more of that, a deeper look into that risk profile. Can you tell me a little bit about that process and how those changes can really affect somebody's risk profile?
Yeah. So, I mean, what we do is like we have automatic engagements through email that we just, and we also could set up text, which we've looked into it, but we haven't done it yet. But email is the easiest one to start with, which we just send an email every 3 months to just check in, and then 6 months to kind of push it a little bit harder with the agent being involved, especially as policies renew. And we just, if they have signed up before, all they have to do is to just look at all the information we have and change anything that they want. If they want to add something, it's easy for them to basically do it all online. And any changes that are made, the agent would be notified. So if there's a change in the policy recommendations, the agent will be notified that there's a change made, there's a new recommendation. So the agent has an opportunity to get on the phone call with the customer and to be able to ask more. At the same time, our system allows the customer to do online quoting and even check prices themselves. So a lot of it's self-service. So that we minimize the need for the agent to have to do a lot of the work and just put them in a position to just basically do what they do best, which is, bringing new customers and at the same time consulting them on the more, conversational stuff.
It's awesome.
Skills I've acquired over a very long career.
Absolutely. So tell me a little bit about why you love the project so much. I mean, one of the things that we said in the introduction is you're on a mission to help people, empower people to develop their own risk profiles, to know what they're up against. Why is this such a passion project for you, and what has your experience been so far as you're rolling it out to agents?
Yeah, so the reason I like this project a lot, and I obviously, as I said, I was investing in a lot of startups before, is that insurance at its core is a very noble concept. We all know that. We all know that insurance was built by people, by communities to help one another. So if 10,000 people get together, so if that one person has a problem, then 9,999 other people help that one person get off the ground. It's as noble as a cause could get, right? But at the same time, it doesn't feel that way. The way that people feel about it is like this dirty, product that they have to buy, and they just hate buying it, and they hate dealing with it, and they feel forced to buy it, and the whole experience just feels wrong. And at the same time, I felt like the way that the innovation is changing and where the focus is right now is just to make that process easier and quicker, because they want to make it as the process is just to get it over with as quickly as you can. And this is not the essence of insurance. The essence of insurance is to like really guide people to be protected. And that was a space that I felt like is missing. I felt like this noble concept is just being, hammered down to this like, transactional thing to like, let's just get it over with. And I felt like that's where the space needs to be focused on. Like, how do we guide people, advise people, and make sure they're protected? And at the same time, how do we give agents a chance to fight again? Because that's what their role is. And I feel like a lot of great agents are out there, and all we have to do is to give them the tools, capabilities to be able to compete with all the big players with, a lot of fundings.
Yeah, no, I absolutely agree. With your tool, it really is giving the agent that whole overview, right? That bird's eye view of what's going on in our insured's life. What are the different things that they have right now? Their assets, as you said, their health and their physical assets, all these different things, their ability to earn an income. And we have all of that information right there. How has the rollout been for you? How's the experience been so far as you're presenting it with other agents?
So the product is new. That's why a lot of agents are starting to just understand it, and it's a new concept that has not existed before. It's because it's new. We decided that we only want to roll it out with 20 agencies in California to just get an understanding of what is it that they want, what is it that they like, and just get a better understanding of the product market fit. Getting an agent to a phone call, it's a little difficult because I'm sure they get bombarded with a lot of value propositions. I mean, I'm an agency. I had to get my licenses to be able to set up this business, so I understand the frustrations. But once someone is on the phone call and they see a demo, there's an 80% chance they want to try this and they want to move forward with it. So it shows that many of the agencies understand that the business is being disrupted and they want to improve and they want to get better and they want to fight. And they're very open to new tools like this. But we're yet to see how impactful it's going to be on disrupting. We're very hopeful. So far, the results have been great, but a little bit early to say with much higher confidence.
Yeah, no, I hear you. That's the thing with the new projects that we're rolling out, right? We're working on something ourselves. We are working on a project where we want to get mortgage lenders as partners. And just a little while ago, just before we hopped on this call, my brother sends me this message, this article that kind of put a little dent in our plans. So I totally get that. It's it's a tough thing getting it off the ground.
It's worse. It's so much worse.
Oh man, I hope not.
It is worse. It's like, so when you want to get a company off the ground from outside, it just looks amazing. And honestly, I knew it's hard when I got into it. This is my I built a division within a company before, but I never started a company from scratch, on a tech company especially, because you have to prove the concept first. But I have to tell you, doing it is at least 10 times harder than I thought. But I'm having a lot of fun with it because I'm learning, but that's why this video is just perfect.
Yeah, absolutely. It is a project, but it's a passion project and it's something that we love. So has your biggest struggle been getting agents on the phone? Is that what you would say your biggest struggle is, or is there something else?
So the first struggle, the first thing that we're getting better and better at it, but it's still going to be like a journey, is understanding the consumer behavior. How people behave in insurance is not logical at all. It's very uninformative. The way they behave, it's very transactional. And at the same time, when you ask them, and as I said, when we survey people, most people say they don't want the minimum amount of insurance. They don't want the minimum the liability deductible or the highest deductible. They all want optimum. They all want in the middle, and that's by far, the most of the population. But then, the way they behave online and the way they transact, the way that they have to be sold to while not being, it's like the design and the experience aspect of it is where we have spent the most amount of time. On the agency distribution side, yes. I mean, being able to cut through the noise and get to an agent at scale, get to agencies at scale, and then at the same time, having their interest to kind of try it. It's not big struggle, but obviously, we would have hoped it would have been easier, or at least we could have got to more agents, at least to have a dialogue with them. As I said, if we get to the dialogue, it's a very high conversion, but getting to the first dialogue hasn't been super easy.
Today, Junior?
Right? Come on, guys. It's funny you're talking about the illogical response or the way that consumers actually buy insurance. Everybody wants the most insurance, but they don't want to pay as much for insurance. Do you think it's because insurance is just too expensive? Do you think that insurance companies are just charging too much and people can't get as much insurance as they want for the price that they're willing to pay?
No, I think it's mainly because it's not a tangible product. We're talking about if you think of life insurance for a 35-year-old who's healthy, the chances of them dying is 1 out of 10,000 for them to, and or when we talk about an auto accident, a bumper, it's small, but having a massive liability because you hit someone or killed someone in an auto accident, it's these are likelihoods that are less than 1%. And for a lot of people, it's I'm spending $1,000 a year, or a few grand a year on something that I could also die this year. So it's it's not tangible for them, and I feel like that's it. But the money or insurance for sure has room to be. We could squeeze out and make it cheaper, but it's not a super high margin business compared to some of the other businesses. Right. So when you look at auto insurance, an insurance company pays 60 to 70%, and this is a number that most people are surprised when I tell them this, that 60 to 70% of what they pay for auto insurance, for example, goes back to customers in claims. And then insurance spends like another 30% operation. Yeah. And that's why it's not like as crazy margins as people think they are. The insurance companies make money and the bad reputation that people give them. I actually think it's a lot better than people think.
We're not just doing this for money. We're doing it for a shitload of money.
The insurance companies are, right? No, I remember going to a carrier luncheon, right, in the before times, before everything shut down on us and they were still doing these things. And at this luncheon, they were giving out awards for all the different agents that were doing really well. And, they're telling us the story and they're like, yeah, so this year we operated at a 110% loss ratio. And I'm thinking to myself, wait, 110% loss ratio? They lost money? Like they're just losing money? Like in their auto insurance or commercial auto or whatever it was. They're like, but in our homeowners insurance, we were at a 95% loss ratio. It's like, holy crap. Like these companies are working on such insanely thin markets. And a lot of people don't even realize that. And even though they're paying $200, $300, $400 a month on their insurance and they feel like they're paying way too much, the truth is that insurance companies are paying it all back, like you said, to the customers in claims. So I don't know. I mean, it's an interesting space to be in, to have the knowledge on both sides. And with your product, with the things that you've got going on, like, do you think that there's a way that you could affect that? Do you think that there's a way that Vero could change the insurance landscape so that maybe there's even more of a potential profit for the insurance companies?
Yeah, no, that's definitely one of the hopes. I mean, we eventually see ourselves to be building even a risk manager. And a risk manager means that we want to help people mitigate risk and losses. And, if nothing happens in the first place, there's no claims paid. I think both parties are happier. Like a customer doesn't have the burned house and an insurance company is not paying claims. So that means insurance could get cheaper for everyone and insurance companies could even have better profits. So eventually we do think that we could have a large impact if all goes based on plan, but we're far, far from it to be able to see the results from it.
Yeah. I mean, the first step is, what you've got going on right now, which is to build the entire risk profile. And then you're talking about risk management. What's the difference there?
So we see it in 3 steps. Number one is that we need to understand risk and we need to understand the data behind it. So it's like, how do we understand it and how do we communicate it? Which, it's just kind of like understanding it. The second step of it is to give insurance advice, because the way that people manage risk today is majority through insurance, and that's businesses and personal lines. And making sure that you could afford the loss, let's just call it that you could afford the loss through different financing methods, insurance or savings or rainy day fund is the second step. The third step, which is down the line, is that now that we make sure that you could afford the loss, can we lower the risk of anything happening? Or at the same time, if something happened, can we make sure like we could control the damage? An example would be like, for example, the cyber insurance industry is perfect for this, just because in cyber insurance, they have cybersecurity to make sure, there's no losses through security. And then at the same time, if something happens, they help you recover to bring the cost down, to make sure like you recover as quickly as possible. And, the quicker you recover, the less they have to pay out in claims. And that's what risk management is versus just insurance.
Got it. So it's about lowering the likelihood of the loss occurring in the first place.
Right. It's making you whole as a service versus just, paying for it. So imagine like if I have an auto insurance accident, instead of the insurance company just give me a check and say like, hey, go fix it, they come pick up my car. They first make sure like I don't get into a car accident by putting different devices in my car to alert me if something happens or, whatever they can do there. And then at the same time, if a loss happens, they come pick up my car, they go fix it and drop it back off at my house rather than me having to deal with a lot of the process.
Nice. And here's a rental while you're at it for the time being. That'd be easy. Yeah, I love that idea. Well, Ali, I got to ask you, before we, as we're closing out here, you have been growing and learning and doing all of these different things. Where have you spent where have you invested your knowledge? In other words, what books have you read? What podcasts do you listen to? Who are some of your mentors that have helped you get from where you were to where you are now?
Ooh, that's a great question. So It's a little bit different. It's the knowledge that I needed as a CEO of a tech business. It was a little bit scattered between my insurance knowledge, what I needed to learn in insurance. For example, one of my advisors, it was the previous chief underwriting officer of Swiss Re, Matt Weber, and he's been a tremendous advisor. He's been amazing, and he's been very patient with me as I've learned over the years. And I knew him from Plug and Play days, and he's been super important in the birth of Vero. And then at the same time, I had to learn a lot about software development and product development, which there's a lot of great books out there. I think the Design Sprint has been one of the most helpful ones in the sense of how do you understand customer pain point and turn that into a product. But I'll be honest with you, my most recent book that I've read that has been my favorite one by far has nothing to do with insurance or business. It was Obama's Promised Land.
Oh, I read that one too. That one was great.
I really enjoyed that book. Like giving like behind the scenes in politics. I hadn't read a book in politics in ages, and it was just because it was Obama's I was like curious and he talks about everything. And
yep.
When you said like your favorite book so far, like over the past year. Yeah, which that one was probably mine. Favorite one so far.
Yep, I just finished that one a couple of weeks ago. It was fantastic.
Yeah, it was such a good book, and you learn a lot about like how politics works and patience and all that. But
politics and yeah, absolutely, like the different ways, like you got to make these people happy and still try to push oh man.
And even a president of U.S. has to compromise. You know, it's like one of the most powerful, like if not the most powerful position in the world, and you still like you don't have as much freedom as you think you have, and how much you have to compromise and deal with it. It was a great book.
And his first term, he even had the Senate and the House majority, and he still couldn't do everything he wanted. Yeah,
it's
anyway. Great book. 100% agree with you on that. Last thing before we head out, if somebody wants to partner with you, if we've got agents listening in that want to get a taste of Vero and become better risk managers for their customers, how would people go about getting in touch with you?
Yeah, so our website is myvero.com, and my email address is ali@myvero.com. So that's the easiest way to reach out, is to just send us an email. We have a Twitter. We're not super active on it, but obviously if you send us a note on Twitter, we could reach out there. But I think email would be the easiest one, ali@myvero.com. And the agents could try myvero.com as well to just get a sense of what the product is.
Outstanding. And you are still looking to fill those 20 spots?
The 20 is kind of full. I mean, we might have one or two people that might drop out. So if something opens up, we could add people to the waiting list. But we're almost done with 20.
All right. For California, what about other states?
The other states, we're first going to see how everything's going to go with California, because every state we have to make some investments. Like, for example, we have earthquake insurance, which is more like a California thing. And some states we have to focus more on hurricanes and floods. So for now, it's mainly California. But if other states are interested, we definitely could prioritize those states as long as people let us know and we know we have interested partners to pilot with.
Very cool. Very cool. Well, I am looking forward to everything that myvero's got to offer. I've been working with you already. And Brad? Was it Brad?
Yes, Brad.
Yeah, Brad. So, you guys have been awesome. Looking forward to everything that you guys are going to be doing. I really think, again, that this is something that's going to shake up the market and, help agents really become, as you're saying, risk managers, right? And advisors as opposed to transactional agents.
Yeah.
Ali,
James, thank you so much for your support for everything. Thank you for having me. As I mentioned, I don't know if I mentioned this, but for every partner that we're working with, we're doing it for free, completely for free. And all the agents that, including yourself, that have taken a chance on us and doing it, we're super grateful because we're learning so much from you and other people, and it's been amazing. And I'm really, really looking forward to 2021 and working with you.
Awesome. Thank you. Same here. Ladies and gentlemen, and Ali, thank you so much for being here. I really appreciate it. Ladies and gentlemen, thank you all so much for tuning in, for checking out the show. Don't forget, as always, to subscribe, rate, and review if you got some value, especially out of the show today. Take a look at myvero.com. You'll definitely want to check out what Ali's got going on. If you want to be a guest on the show and, let's talk about the stuff that you've got going on, go to www.insurancebroShow.com/guest. Would love to have you on to learn from you as well. Don't forget to follow me on all my social media at Insurance Bro Show. Thank you all so much as always. You rock my socks. You have my heart. And you
Have a nice day.
Thank you for tuning in to the Insurance Bro Show. James is the CEO of the Pipeline team of San Diego and is always in the market for top talent. If you're an agent looking for a place to hang your license, visit www.pipelineinsurance.com/agent opportunities or send an email to newagent@pipelineinsurance.com. Look for James on all social media